Yo, good morning, y'all. Hopefully y'all ready for the session today. It was a crazy explosion yesterday, huh? Just went straight through the roof. Blew out every target to the buy side that we had mapped out. All previous week's highs, previous week's high, previous week's high. You notice that the gap open simply just looked to target that low from what, Wednesday? So one of the previous days from the last 5 days. Tag that. Body closures are still happening in that upper 25%. So prices just continue to go higher, right? So we'll see if it can get us up to the highs up here, because we now have equal highs. But yeah, could y'all let me know if you hear everything okay, see everything okay? Yeah, it definitely was beautiful yesterday, Eddie. That's for sure. I think we're going to start getting into some better conditions, right? We'll see what happens. I know that the new Fed chair is going to have a big impact. He's buddies with Trump, so things that are going to be done, I'm assuming, the rhetoric is going to be different, right? It's not going to be so negative like Powell was. He was just a tragic issue. Anything he said, just if he shows up on the camera, things go crazy. Good morning, Jen. So yeah, we'll see what happens in the coming days. Again, we still got the ceasefire situation. Obviously, they got other plans, right? They got the plan to keep going higher. So again, this low in relation to the previous year's low, right? It happened at the same time, like we've been talking about. So this wick here, right, being traded to, being respected. It's a down close candle here, but on the daily, it's a wick. I mentioned that that's going to be significant, and you can see that it's held up. All right, and simply just got priced down below the current monthly low. So April 1st, basically up there, that one. So accumulation, right, and manipulation. One more time, respected that fair value gap, and then bounced, right? Inversion. So this is a balanced price range, right? Another variation. So prices just expanded through to the upside. So yeah. Now we took out London's high. So let's map out some of our liquidity real quick. Put that there. So we've got London's low, London's high. This is the current daily low. So we had accumulation from Asia going into London. Asia's lows got swept. Well, most of them got swept. Let's take a look at SMT. There's a small SMT in there. A little bit larger with the Dow, huh? So there was SMT there. So that's just continuing to push price higher. Okay, just another reason. This is a huge range expansion, and we are about to hit, well, we have already hit significant PD arrays. So we do got to be cautious about retracement risk. But yeah, we'll see what happens. We got news coming soon. So 5:30, we'll see what happens. Jen, have you had a chance to download the journal? I have another version of it too. Added some stuff. Let me know in the chat. Any of you guys that are part of the private group, let me know if you've had a chance to download the journal. It's in the one-on-one student notes section. It's updated. It has a different equity curve. It has the ability to have more screenshots. So you can basically turn it into a full-on backtesting tool as well. I'm working on putting a section where, well, not a section, but a feature in the backtesting portion, like in the study portion, to be able to pull data from like a backtesting session, right? So you can have your main situation where it's tracking everything, just for your actual account that you have linked. And then the backtesting idea is going to, you're going to be able to pull that data from that as well. I think I already added something for, like when you do reflections, it allows for you to pull data from other parts of the journal, right? Like statistics that are being tracked, and then whatever day that you're reflecting on, the information will show up, right? Your statistics for that point in time, where it was at that time, it's going to be pulled up. But yeah, for those that don't know, I got this little test account here, right? It shows the amount, right? Whatever the account is. The equity curve is going to be like like a prop firm, right? It calculates everything, right? All this stuff. You have a pre-market section where you can add plans and whatnot. And then you can attach this to every journal entry that you do, every trade that you implement, right? You got reflections in here. And again, any reflection that you do, it's going to auto-generate analytics. And it'll show you at that time how things were. Then I got the study section. You can add a lot of videos. Well, if you have like screenshots, that's probably better. But you now have the ability to take a screen recording as long as it's under 1 minute, because you don't want to, really have like long videos. It's bad for the memory. You could still put a lot, even if you put videos, but you could do thousands and thousands of pictures. So the runway is huge before you start running into memory problems. So it's just honestly not even a factor unless you put a ton of videos, which I don't encourage you to do. You could do some here and there, or just as long as they're 30 seconds to 1 minute, just showing you the the entry and whatever you want to have showing, but it has to be under 30 seconds to 1 minute. Then you got a playbook section where you can put the playbook, right? Any plays that you like. You have the trading plan section where you could do, your daily, weekly, monthly process, your rules, risk management. I believe all of this stuff can be basically attached to the trades that you do. I think you could put this one too. I'm not sure. Then of course there's goals, and then system-wise, you can put your risk checklist. You could do trade checklist, so on and so forth. You could save the data. But then another thing that I added, you have a theme customizer. So now you could change the colors. If you don't like the red and green, that's typical, you could change it to say the color of your candles, right? Or whatever you'd like. Have it to be a light version and whatnot. You could change the color of this as well. So it's highly customizable. And again, it's not going to only be just for journaling, for your trades. It's actually now a full-on backtesting engine with auto-generated analytics that I'm going to add, for those times that you're going to be doing backtesting. Okay. So yeah, this is something that you're going to be able to get as part of the private group. Month to month, you're going to have to wait 3 to 6 months. But if you're my lifetime one-on-one student, you get it right away. Anyone that's in the group right now, right? Because you guys have been with me, you guys are going to get it, obviously. So just ask, or you could just go to the one-on-one student notes section and it's there. But yeah, this is just going to be another thing that you get as a benefit by being part of the private group and putting your trust in me as a mentor. And then again, still got progress that we're making on the algorithm that we're creating for one of my trading models. I have 3 more that I'm going to make. That whichever one you guys gravitate to, you just let me know, and then I'll send you the access to it. That's going to be strictly for students that are with me on a one-on-one basis, or everyone that's been with me before I started making the algorithm. Okay. So yeah, just wanted to highlight some new perks that are coming to the private group, and for those that really take it serious and want to be, a part of the family long term. Okay, so yeah. With that being said, again, we have news in 15 minutes, so we'll see what transpires as a result of that. We do have this clearly going higher. So what's the easiest clear draw on liquidity? Right, we got weekly highs that have been swept. 1, 2, 3 weekly highs. All of them have been taken out. So now we have another one that's in the crosshairs. If it hasn't, yeah, it hasn't taken it yet. But this is now in the crosshairs. It's relatively equal highs. And then, of course, we got this little gap up here, too. Same thing with the S&P. And the Dow is definitely the lagger. It's lagging behind a little bit, which is weird. Well, not weird, but kind of funny, because the Dow has been the leader for the most part for literally months, whether it was going lower or higher, right? So, you can kind of see that right here, right? This had the higher high, aggressive higher high. All the others kind of somewhat failed. Oh, the S&P kind of tagged the high, though. And again, remember what we talked about at the beginning, right, of the year. We talked about power 3 on the year. You guys got to see that unfold all the way from the accumulation down to the manipulation. That manipulation did the same thing it did last year, and went into a quarterly PD array. This year it was a quarterly fair value gap. Last year it was a yearly bullish order block that set the low. Tariffs were the main catalyst, right? Last year, being pulled back from the extremes that were being, that were about to be implemented, right? Instead of 100%, it went down to 15%, 10% across the board. So we ended up having that low get set at the yearly order block. This year, it is the ceasefire with the war. So you can start to see that the catalysts behind the higher time frame, like significant seasonal highs and lows, in the power 3 for the yearly range, how that correlates with real world events. They always come up with something. And if there's nothing happening, you just look for a higher time frame PD array. But when you have the geopolitical elements like news, along with the higher time frame, like quarterly, yearly perspective, like coalescing together, you could see that the result is pretty massive. And again, sometimes you got to wait, right? If there's a lot of craziness happening like there is right now, sometimes you just got to wait. Okay. And what we waited for was this wick to really confirm, and then it was off to the races. And then when we were trading up in here, again, it did everything that we said it was going to do, right? Stayed in the exact levels that we assumed it would stay in, and it's still doing so, right? Still stayed up in that upper 25%. All right, so from the gap down here up to the low right there. See, let me move that a little bit. Right, and then of course that's in the upper 25%. And look at the body closures. Sure likes that midpoint of that upper closure, right, or upper 25% of the fair value gap. Sure likes that, doesn't it? On a body closing basis, it's stopping. So yeah, I think this will continue. We dropped down below the open price right there very slightly. It's clearly in a hurry to get somewhere. Will we end up getting above these highs up here? Possibly. You know, will we create new all-time highs? Maybe. With the new Fed chair, I think it's pretty likely. I think it's pretty likely. So we'll see how all that unfolds. But yeah, so if we take, let's go to the other charts now. So again, we got London high, London low. We got SMT here. So we will see. Again, my main objective is going to be to see if we could target this. Obviously, this is above this high up here. So we'll see if that wants to be taken out. This is a failure swing up here. So this is actually, it's actually still London's high because we're not quite into the New York session open yet. I mean, I guess you could say that, you know, from 4 a.m. Pacific Standard Time to 6:30, right? Like within that realm of things, we're starting the early stages of the AM session. I like to just, you know, when it's like this, I like to just keep adjusting it. Call that London's high. You could just use things that are before 4 a.m. You can use from 11 p.m. Pacific Standard Time to 2 a.m. as like a little range. And if you could find like highs and lows in there, those are significant because that's part of the London kill zone. So that liquidity a lot of times can be utilized, especially ahead of the open. Because that could be counterparty, right? Like in this case, if it goes lower, you know, this is London's buy side liquidity. So if it does go lower and say it targets this here, which could end up becoming a possibility if, you know, it really breaks down, you know, this will end up becoming counterparty liquidity to then target this area. And if this happens and it proves that it wants to take this out, right? This range can be looked at as a market maker sell model. This little consolidation here, accumulation, possible smart money reversal. If it breaks down through this and price trades up into that, we have to watch that and gauge if that's going to hold. And if it does, and we get displacement, this becomes a market maker sell model too, inside the larger one. So then in that case, right, if that unfolds that way, then we obviously have the little gap in here. It's the fair value gap. All right. Let's get in a little closer, make sure there's no gap in there. Okay. There's a gap in here. There's a little gap right there. I'm not sure if that, I think it's a new day opening gap. Let me see. Yeah, it's the new day opening gap right there. Very little. The close is right here. Right there, and then the open is there. Little discrepancy. We have a closure here, and the other body open was right there. It was a little bit lower. So there's a little tiny gap in there. So let me see. It's pretty tiny. It's not even showing it. Maybe if I go down, it will show it. Maybe not, because it's not really a gap, really. Well, visually, it doesn't look too obvious like it's a gap, but it is. These levels are still significant. You can see how price treated it, right? Holding, holding, holding. But yeah, my objective, what I'm looking at, the PD rays that are important, obviously it's the equal highs up here. Then we got this down here to watch, right? If it does give it up and, you know, displace through this little accumulation level. If it breaks through that too, if you take this high to that low, it's breaking the midpoint of that too, right? And you guys know that, when we go lower to go higher, or you measure that out, once we're above it, it shouldn't come back to the midpoint, right? If it's going to be a healthy continued move to the buy side or sell side, right? If we got this low to that high and it breaks down, if it returns into that range, it should not reach the 50%. If it does, you're wrong. And you got to go back to the buy side. So yeah. Jen, let me actually send you the file. Yeah, when I send it to you, let me know if it works. Well, if you're on like a phone or out and about, you're gonna want to utilize it on your computer. I'm working on mobile responsiveness, so we could have it on the phone too. I'm also going to turn this into an app. So by the end of the day today, you guys will have the app version. So that's going to be nice. So it'll be easier to launch too, and you can put it on like your phone, and then you could just click an app. You don't have to go through the process that we currently have to go through. Just makes it easier. So it's not too much of an investment. So might as well. So yeah, unless something changes, we're still looking for the highs up here, right? Again, this level down here, well, this high to that low, midpoint shouldn't even be really attempted if we're going to keep going higher. I think this is a very obvious logical target for this to reach for. What the hell is it? Oh. So again, that's a previous week's high. I think we're going to get up there really, really easily. So yeah, we got news in 3 minutes. Let me make sure. Is it the right one? Oh, wait a minute. I think it's the wrong one. So yeah, any of you guys that do get a chance to open up the journal today, those of you in my private group, let me know how everything goes. Let me know how things go. So yeah, do you guys have any questions? We are about to start, right? So we'll see what happens. We shall see what happens. Hopefully you guys have had a good week so far. Hopefully your weekend was peaceful. Yeah, yesterday was pretty nice. Pretty nice. So now we hit 530. So look what happened. We took out the liquidity pool that I said would be the first target. So, let's see what happens here. Still has a little ways that it can still go. We still have that gap up here. We still have a deeper buy side up here. It's like one layer up above it right there. So I don't think that's unreasonable, but we'll see. It's pre-market open, so they may want to, flirt around with that, come back down and mess around with some of this over here. We got a stop run. Here's an inversion. So, well, almost an inversion. When it gets below that, it should act as resistance if it's going to go lower. And on a body closure basis, when it does trade into this, again, if it does, after this happens, we should not see body closures close above the midpoint. And if you just keep seeing wicks like that and it doesn't close above the midpoint, order flow is screaming to you that it still looks like it wants to go lower. And then we may explore some of this. And again, once it breaks down below this, we put our mind into market maker sell model mode. And then we look to target this as a low resistance liquidity run because it's a low and a failure swing relative to this low and that low. But if it uses this and displaces higher, we'll try to get in line with some type of continuation. I'd prefer to see it continue going higher, but it's not out of the realm of possibility, given that it's been so aggressive, for them to maybe look to decline a little first. Overall narrative is still bullish, so it's what we're going to mainly be focusing on. But there's nothing wrong with liquidity being swept on this 4-hour chart, then looking to reach into internal range liquidity to then look to go higher. Oh yeah, Eddie, you can just ask your questions. You don't got to say you have a question. You could just throw it in the chat. And then if it's at a reasonable time, I'll answer it. Anytime before the open price, right? Generally questions are encouraged. Obviously, when we're in the midst of things, it's kind of hard for me to get in depth with questions. Sundays are obviously the best of the best situation when it comes to questions, because then I can get real deep with things. I was thinking about candlestick creation in its simplest form. Okay. Yeah, everything when it comes to candles is power 3. If you want to keep it extra simple, power 3 is something that you could utilize. Well, it looks like the indicator spit this out. That's interesting. Again, I wouldn't be too surprised if they do look to try to come down a little bit. This right here, if we go to the 15-minute, 15-minute chart, you can see it. There's a pretty clear relative equal low here from London. It's been nothing but bullish. Maybe they want to come down and try to upset these people that are, really smacking it. Freaking Mark. Ay. So definitely watch how it behaves here with this wick. We got this wick in here. Again, we just purged this liquidity. So this could end up very easily becoming counterparty to then try to retrace because it's been so aggressive. Again, how do we determine if that's what it's going to be doing? Well, you take this high to that low. Midpoint should be respected. This high to that low, it's also a bullish breaker, a little one. So if these things start to get violated, then it's pretty likely that we'll try to maybe wipe some of this out. Then we have accumulation, manipulation being to the buy side. Maybe it distributes to try to target the lows here, and then we hang out in this upper 25% still, right, for a little while. But it has a ways that it can go, right? I'd prefer that it leaves most of this open. We do see that there's no real down close candles inside this new week opening gap from the 4-hour. There's not really any offering of sell side delivery. It's all buy side. There's a little bit down here because of the wicks and whatnot, and this too. But for the most part, If it does break down aggressively and say it inverts this, we may be looking to try to target some of that before it looks to go higher again. But again, if we're working with what we have currently, we still have the buy side up here that's logical to be targeted. It's nothing but bullishness, which again, we were able to get in front of that when this respect to this wick took place, which is also an order block, but it's a daily wick right down there. Right there. And it was below the open price, so rally, right? And if you think monthly perspective, it's essentially set up accumulation, manipulation, distribution. And we're also in the middle portion of the month. If you guys remember how I break down the monthly power 3, those middle 2 weeks in the month are generally the ones that really pick up. The start of the month in the first week is accumulation, manipulation. The end of the month, when we hit a higher time frame PD array that price has been reaching towards, that generally caps the monthly range. So that's how you want to break down the month. And you can see it unfolding every single month if you go be diligent and back test. So yeah, the open, high, low, close. What would ICT say to grade the wicks? The body head, most inefficient price. Wicks act as gaps. That's why their characteristic is very similar to gaps, and we treat it as such. And we could see visually in price action, aside from what anyone says, you could see that those levels, they just get respected, similar to how the quadrants in a gap get respected. And so ICT says to treat them as if they are gaps in their delivery nature, right? Wicks have been efficiently delivered. Not always. Not always. I mean, even when fair value gap gets traded to, but then it gets traded to again, like even if it offers both sides, the quadrants are still something that you have to refer to later because the algorithm still refers to those levels. But whenever you have like sell side here, buy side here, a lot of times that can be treated as a balanced price range in itself. A lot of times stuff like this, right? Very rapid buy side, rapid sell side, then it turns around. A lot of times this is actually what a wick looks like when you break it down, right? Like if we take this and we move up a little bit, right? It's part of a wick. See that? But when you drop down lower, you see what it really looks like. But again, if it trades through it and you're expecting, say, to go lower, you got to break that down into quadrants. And those levels you can use as a reference. It's not a be-all, end-all, obviously, but it is a contextual idea that is highly influential. And you don't got to take anyone's word for it, right? You could just go in and observe it and just see the sensitivity, right? Because that's what you're focused on when it does these things. Is it going to be sensitive and support the ideas I'm looking at or not, right? And that's how you can keep it simple and just use the concept for what it is rather than trying to, break it down too deeply. Like, why is it this or why is it that? Like, why does it look like this internally? Like, why is the algorithm creating it like this? You don't really got to worry about those things. You just got to worry about the simple task of identifying these levels as quadrants and how sensitive they are in price. I tried to understand why the algo would use it. See, that's a thing, right? Like why the algorithm uses it. I mean, price has to be efficient, right? So I kind of see where your dilemma is, like where somewhat of a friction would be. But put that friction aside and just think, okay, well, a wick, if I see the wick, I have to measure out the quadrants. And if it's bullish, when price trades into them, that upper half should be respected and dynamic. I mean, and that's the thing, the why behind why the algorithm's using those levels, like on a algorithmic level from the code perspective, right? Like all the details like that are not really something that you should be stuck with. Just understand that when there's a wick, the algorithm uses it. And whether anyone says it or who said it or not, you could see it in your back testing that for whatever reason, it's respecting those levels. So when you're in a trade or when you're observing price, it's best to think of it in this way. It's going to use them. And if it's bullish, it should stay in the upper 25%, right? max the upper 50%. If it trades through it too aggressively, there could be a problem, right? So if you keep the observation of this as simple as I just said, with all PD arrays, and just know that when there's sell side and buy side that gets left by rapid displacement, that creates a balanced, efficient price delivery because both sides are being offered. If you just look at it that way and take that logic, go to a back test and do it for weeks, you'll prove it to yourself, and you don't need anyone to really prove it to yourself. I like using the wicks, but for me, leave the effectiveness. I like to understand the purpose of the code. Yeah, well, unfortunately, ICT has not expressed the purpose of the coding. He expresses the overall simplistic view of how to use it to come to a determination. It might become a friction to you if you must understand the inner workings of the coding. It's not necessary. I don't do it. Pretty much nobody does that. It's kind of overkill. But the simplest why is sell side and buy sides delivered. So when it comes down into it, you treat it as a gap. And you take that and you go study it in that realm of things, you realize that you don't have to make it overly complex, right? So, but to each his own. If you're a coder, maybe you can figure it out. I'm not. So I don't really try to concern myself too much with the overall, like, why the code is what it is. I just want to have what ICT has said before, look and see the effectiveness and how to use this stuff, and then I just do it. I use it in that realm of things because it gets you to a decision. Like the wicks in here too, right? It doesn't have to just be the bigger wicks, even the little wicks. When price trades down into them, you got to study the relationship, right? The current price delivery versus a PD array like the wicks, right? Because a wick is a PD array. The quadrants in that wick are all their own separate PD array within that bigger one. And again, if it's going to use that and support the buy side's going to go higher, when it trades into these levels or any other PD array, the upper 25, upper 50%, if you're bullish, is where you want to see the body closures take place. Okay? And then, as long as it continues to do that, and respect the upper portions like we've been talking about, even with this larger fair value gap, you have no reason to really think it's going to go the other way until it proves it and starts disrespecting those relationships. Okay. And again, this happens not only on the 1 minute, it happens on the daily, right? As you're observing what price should do, right? Like you see the wick in here, the midpoint, upper 25%, that's highly bullish. As a similar characteristic when it respects things like this to the volume imbalance, or not the volume imbalance, the immediate rebalance. When there's like a gap that forms or like a big displacement that immediately comes back to like, this high, say there was a big down candle after this that went all the way down to this and then really started to rip, showing sensitivity back to the buy side. It's very, very dynamic, right? This little signature here, this signature in here from the 4-hour view, how it's staying in the upper 25%, right? You see this closure here, this bullish candle immediately rebalanced to this candle. And what happened? Speed, right? So these little signatures in price, obviously there's many of them, but these little signatures are highly influential and characteristics, right? With how price's relationship is with current price to a PD array that is being involved with. It's just, highly effective. And again, anyone that, any of you guys that catch yourself feeling like things are being overly complex, or maybe you're overcomplicating things by trying to look at things that may not really be necessary. Try to think of things in a simplistic way. That's what I try to do here in this community, right? I try to make it simplified, but give ICT credit, but also not take away from his teachings, right? Because a lot of people simplify too much and they rename stuff and try to act like they created things when they didn't, and they're not even profitable. But then when someone tries to learn from them because they're not teaching it the way that ICT has talked about, you could see that there's a problem that takes place. It's incomplete, but that's why, when you learn ICT concepts from somebody that's teaching it, make sure that they have a lot of experience. If they're trading for like 1 year and they're trying to be a mentor, I mean, really? Really? I mean, it shouldn't be a surprise that stuff that you learn from these people doesn't work versus someone that's been doing it for almost 10 years. Um, or some, even some students that are in his private mentorship, right? The charter group, which is an amazing group, by the way. I have many friends over there. But I mean, they have to have something that they could prove to you. If they're not proving broker statements or whatever, like because if that's maybe something they don't want to do, that's not the only way to verify, right? Let them come on live every single day, right? Like I do in my private group, like many of the charter students do, right? And let them prove that way. And you put 2 and 2 together. The money that people make is not spendable by you. The Lambo that they drive, supposedly, you can't drive that Lambo. You have to get it yourself, right? So, make them prove it to you. And if they don't prove it to you, remember, this is a thing you're trying to do to change your life. You're going to really put the likelihood of your success in someone else's decisions, right? Someone that doesn't even prove it, like they can't even come out and do what we do, just live. I mean, you could imagine that the risk to reward there is very off balance, and it gives you the opportunity to blame somebody else. So you can't really see what the true issue is with you, right? You're picking up on someone else's stuff. And so you have someone to blame when in reality you push the button, right? So you have to take accountability like that. And again, make sure that these people prove it to you, that they know what they're doing. At least at a minimum, they come out live like I do every single week and in my private group every single day. And then you can quickly see who's bullshit and who's not. Because if you're in a live where you can't edit it, you can't fake things, like the price action's living and breathing and you're making like real-time decisions. I mean, you can't fake that. You can't fake it. And if they're teaching you the why, like I do, why I think something should hold or why it, potentially in my mind failed, and then how to get back in line with it. If they don't have that skill set, again, what are you doing? Right? Like it's a waste of time. I know it was for me, right? I was taking signals, I was, thinking it was going to be a cakewalk and I just have to push a button and I'll be rich. It gets to that point, right? When you know what you're doing though. And to get to the point where you know what you're doing, you need the right information. You need to put in the work. You have to have the right mindset, right? It requires a lot, So if it seems too good to be true, it probably is. Especially if it seems too good to be true with some mentor and they're not even proving things to you in any form or fashion. And there's ways that they can do that, outside of showing you that they're driving a Lambo, right? One way is to do it like this. Okay. So yeah, 7 a.m. Are you talking about Pacific time? Oh no, 7 a.m. to 9:30. Okay, New York time. Yeah, so anything before 9:30 can have a classic characteristic of consolidation and manipulation because you're ahead of the open price. And when you think of power 3, what the hell's happening to the chat? It's moving. It's like twitching. But yeah, when you think of power 3, anything that happens before the open, at least for the indices, a lot of times can end up becoming part of the consolidation and manipulation phase. When it gets closer to 10 a.m. Eastern or 7 a.m. Pacific Standard Time, which is a new 4-hour candle, which is also the silver bullet window. A lot of times, say you're bullish and going into that time, price has been declining, but you're still bullish. Once it fulfills a PD array and you could align certain things, maybe even London's lows get swept. Many times beyond that 7 a.m. Pacific Standard Time, 10 a.m. Eastern portion, there could be a reversal. I don't know why, but that's just kind of like a common thing that takes place. It doesn't always happen, but when certain things align, a lot of times that can be a characteristic. The first 30 minutes can also kind of have the manipulation consolidation portion bleed into it. That's why ICT says many times that you wait for that first 30 minutes to unfold. Let the gamblers come in and throw their entries in. Here we don't worry about missing a setup because, again, every single day we're able to find multiple setups. Does that mean we take all of them? No. Does that mean all of them work out? No. But most of them do, right? Most of the time they work out. And a lot of things that I'm considering are, stuff like what I just mentioned. And there's a reason ICT says things. When he says something about a topic, you got to remember that you think about why he's mentioning it. Why is he pointing things out? What's the significance? Sometimes he explains it, sometimes he doesn't. He leaves it to you to go discover. But you always want to think about these things. I'm not sure what session to specialize. You mean what portion of the session? Because that's all part of the same session. So if you want smooth flowing price action, I'm going to just revert back to what I always say. You want to let that first 30 minutes unfold because, again, anything before 6:30 and many times anything before that first 30 minutes, you have the risk of trading in the manipulation of the daily range for indices specifically. Of course, if you're trading like currencies, it's a little bit different. The dynamic is different because you have London that's being involved, right? The euro and London, those are European assets. And so they go off their European London session. So the dynamic is a little bit different, not entirely, but it's a little different timing wise. Because in those assets, London creates the high or the low pretty much almost every single time. Right? And the most dynamic price delivery is happening in that London session. New York session carries it over too because it's a crossover. But with the indices specifically, if that's what you're focused on, anything after 6:30 is something you want to look at and consider if you want the cleaner price delivery. Sometimes pre-market session is clean if you understand the manipulation and where it's going. Like if it's going higher, but it's like overall going lower at the beginning, like pre-market open, many times that decline or, delivery against whatever the narrative is basically reaching for some PD array on the higher time frame, 15-minute and above. And then once you see, one of those time frames hit that PD array, if price has been going against your narrative pre-market open, many times it'll use that to rally up going into that silver bullet window. All right, a lot of times, it could do the reversal there, especially if that time aligns with price, right? A PD array or a liquidity pool that it just swept. But the underlying tone of the market is bullish still, right? Right, for a bullish scenario, these are things you want to consider. But again, to keep it simple, if you want the smoothest price action, ICT himself has said you wait for that first 30 minutes from 6:30, 9:30 Eastern, 6:30 a.m. Pacific Standard Time. You let that first 30 minutes unfold, get that regular trading hours gap, right? You have a 70% chance of it reaching into the midpoint of that as well. So the first 30 minutes, you're going to definitely want to use the regular trading hours 50% level. It's just a very common thing that it uses. You know what I mean? But again, you want to push your trading. If you found that you're struggling pre-market open or right at the open, I tell all my students that come to me with the same problem. Because, if their losses are seen, concentrated before the 6:30 or inside that first 30 minutes, I tell them to push it to the 7 a.m. time and only trade in macros. Only. Unless your trade setup performed starting from a macro, and you want to catch a continuation later, only then am I personally permitted to take a trade outside of the macros. If I see the setup formed in the macro, but maybe I missed it, I can catch a continuation in that hour, right, wherever the macro was, right? Say it's 6:50 to 7:10, right? If that's the case, in the 7 o'clock time, I'll be able to take a continuation as long as the move's set up from that macro, right, within that macro. Otherwise, I'm trading solely in the macro. There's nothing to trade unless I'm in one. Like right now, this is the unreliable macro. It's the very first one before the open. A lot of times that's, again, part of the manipulation, right? It's inside that pre-market open portion. And the risk is, you can get sucked into manipulation if you don't know what you're looking for. If you don't understand the characteristics of manipulation and, inside the daily range, pretty much, right? And that takes a while to get to know, because you have to understand every session's role, and you have to do just amazing amounts of study to build that muscle memory. And then you see what happens more often than not. And again, one of the easiest things to just accept is anything before the 6:30 open or 9:30 a.m. Eastern, just classify it as, the possibility of us being inside manipulation for the daily range on indices, right? And then anything after, right? Sometimes things do open up at 6:30 and they present you with a move. But again, that's the highest volatility moment and everybody's rushing into the market. As a result, whatever the overall narrative is, don't you think if you were smart money, if you know that everyone's going to try to dogpile on that 6:30 or that first 30 minutes of the open, don't you think if you were smart money, you'd want to wreck them every single day because people do the same shit every day, right? So you got to think like that's something that's something that plays a role, the masses, right, and what they choose to do. So yeah. So 6:30 a.m. Pacific Standard Time is the open, because I'm over here on the West Coast. So you may be in New York, or you have your time set to New York. Anytime I say a time, like 6:30 a.m. Pacific Standard Time, you got to think, okay, well, New York session or New York time is 3 hours ahead. So 6:30 a.m. is the open for me. 9:30 a.m. is the open at that same time for New York, right? It's the same time, just different time zone, right? So just keep that in mind. From the UK. Oh, okay. Oh, yeah. Yeah. So yeah, I could see that could be kind of difficult. If you ever have a time issue, just always remember anything that I say is 3 hours behind New York, because I'm on the West Coast. Wait. See, is that thing? Okay. My camera be moving sometimes. I'm like, dude, why? Don't be moving. So yeah, we can see that really not much has happened here. And again, if you guys ever have any issues with the times, just let me know, or just like Eddie just did. And I'll always tell you I'm on the West Coast. It's 3 hours behind New York. Since I live here, and it was easier for me to just use my local time. That's just what I choose to do. But again, if I see a time and you know that, just think 3 hours ahead. So if you're using 9:30 and I say 6:30, it's the same thing. And if I ever say a time and you're like, oh, that doesn't align with my time that I'm looking at, just put 3 hours ahead of that, right, of the time that I say, and you'll generally arrive at your time if you're using New York. Yeah, I know, right? I know, Eddie. A lot of times there are questions, but hey, you stick around here long enough, the questions start to die, because I try to answer everything, and many times there's not a lot of questions because we've already exhausted almost every question. So that's why sometimes questions are being asked, especially with the students that come here all the time, unless they're learning something for the first time. Every Sunday, again, we're talking for like 2-3 hours answering questions, going through the market. So yeah, if you guys have any questions, you guys know, just let me know. And again, we're watching what price is going to do here. I called for this weekly high to be swept. We went basically right to it as our first target. We're beyond 530, so London was still active here. So we'll see what price wants to do here. We have this up candle in here. If we look at the midpoint right there. Okay, we'll see how price treats it. If we get a closure below that and price returns into that, We'll see how that gets treated. If that holds and we get another displacement, then obviously we got to look at the midpoint here. If we lose that midpoint, then we got this here as a target. That's a small market maker sell model here. That's also potentially part of a bigger one in here. And just for like a, forecast, right? Not like a, well, maybe I shouldn't call it that, but like a scenario where if price was to go lower, right? This is like the smaller version of the market maker model theory. All of that's obviously inside the high up here. If this was to break down below this low here, then we may be in a larger market maker sell model. And it may offer a bunch of little variations like this as well. It's the fractal nature and the market maker model theory, right? And the market maker models are a core pillar to what it is that I do, for those that may be new. So I encourage you to obsess over market maker models. I have a video talking about it as well, and how I use them, how I see them, how they help me in my trading. So yeah, those of you in my private group that maybe didn't see the message I sent the other day, yesterday, I sent a suite of market maker model videos, a mixture of ICT and my video. I think those are really all you'll really need, honestly, and then just keep showing up like you guys do every day. If you haven't gotten it, which I know most of you have, you will eventually get it very quickly, because those are super powerful videos. And again, we do it every day. We talk about it every day, all different examples. So that repetition, you borrowing my experience, it's pretty powerful. Oh, wow. So we call a little move in there. Those of you that do have access to the indicator already, obviously it's not fully done yet. Just keep in mind that consolidation, right? If it's going to throw off any indicator, any algorithm, it's going to always have a less likelihood of performing. Sometimes it will perform, right? Like this here, that I think that offered what from that high to that low, tiny scalp, not really worth it, honestly, unless it really picks up. We do have a low, high, lower low. So if it breaks this candle here, this may be something to watch. We put that lighter. Do have this fair value gap in here. Honestly, I think we could just keep it less noisy. So yeah, and like I said earlier, as long as nothing changes in here, we'll continue to keep targeting our deeper levels. Again, if it fails though, say it breaks down below, midpoint here, turns out to a market maker sell model, say it breaks down below the lows down here. Again, we have this fair value gap that may need to get targeted first as a result of the external range liquidity here being swept, right? It took external. There is a chance for it to want to seek internal range on this 4 hour before it looks to give us another leg higher, especially because it's been so aggressive. Not only last week, but this week too. There's been very little manipulation. It's just been one-sided, doing the huge recovery delivery like it did last year at the same exact time, because there's seasonal lows that form from March, end of March going into April. And literally the last 2 years, it's done the same thing. And I've shown you guys publicly and privately. So hopefully that really piques your interest for seasonality. There's a lot of people that talk shit about seasonality, but I guarantee you those same people did not have an assumption that this is going to potentially be a low that could lead to a big run. So just saying. So yeah, we'll keep our eyes on this fair value gap here. If it gets beyond that, those are early signs that price is going to start to continue. Again, we still have this high here to that low. Got that midpoint. So let me actually keep that on the chart so we can have it as a reference. Again, all of this is still pre-market open. We're still not quite there yet. So yeah, if price was going to open up right now, say it was 6:30. If I get the exact time. So the regular trading hours gap is going to be huge. Literally, it's going to be massive to the downside. So that may be a reason why early on price wants to try, or at least attempt, depending on where it opens at the 6:30 open. It may give an attempt to try to at least get down to, say, the 25%, maybe the 50% of the regular trading hours gap. Right, in this case, right, this is the close of yesterday, right, the closing price. If price was to open up here, it would have up to the 50% there. Honestly, I think that if it was to do that, that puts these in jeopardy. And again, those lows right there are part of the 4-hour fair value gap that it may look to reach into. We are still resting above in that upper 25%. So again, if that continues, if it stays beyond that, I mean, we could use an 8-hour here actually. It's more pronounced. So if it was to try to, take a little dive real quick, say none of this holds, right? Say this stop run here, we never get up beyond this fair value gap, and then it displaces through this low. That creates a bearish breaker that we have to be cognizant of. And then when price trades into that, we got to observe what's the relationship. How is price behaving relative to this PD array? Because we got sell side, buy side. If sell side's delivered again and it trades into it and respects it and then pushes away, that could be looked at as a balanced price range, because that's what a breaker and an order block are, right? At least that's the internal functionality, right? And why they should hold and why they're so effective. They're one of many variations of balanced price ranges. So yeah, and you could obviously look at that when they do deliver, right? They should be respected as a BPR, just a different style, different name, right? I guess a different variation, I guess, right? And you see this constantly when you look at price and you consider balanced price range ideas that I teach, that ICT teaches, like the overlap of a fair value gap, right? Buy side takes stops, sell side quickly overlaps it. If it's bearish, and this is going to go lower, again, we have buy side, sell side, but not only that, if you get closer in the details, we have a fair value gap that gets inverted, completely overtaking it. So when price trades into that, if we're going to trust it's going to be bearish, the bodies have to close below the midpoint. And if it breaks the low here, we got that whole entire buy side, sell side range to be observing as a potential balanced price range. I do see that there's like a weird discrepancy in here. Is that on all time frames? Yeah, it is. So that was caused by the news. We do have a wick here, buy side, sell side, buy side, sell side. It's just a little gap in there. It's like a little discrepancy. It does have a lot of delivery in that level though. So it may not want to go up there, especially because we have the overlap here. We do see the relative equal lows here. Doesn't that look like a pretty nice liquidity pool? Very short term, very close. But if you're smart money, it's not unreasonable, especially if they stay above the 50% of that range from this high to that low. It's still valid. So that's all a possibility. Staying in the upper 25% from this high to that low, though, obviously that's better. That tells you that we're highly bullish. But again, we have massive runs, large ranges lead to small ranges. External raid liquidity engagements a lot of times then lead to internal. Then once it hits internal, like a PD array or some liquidity pool inside the range, a lot of times when you get a change in state of delivery on at least, say, the 1 hour, that tells you that you're back in line with the narrative, right? And it's something that can be relied on. And you could just continue to trust that timing-wise, price has told you that we're continuing the trend, right? So yeah, some things to think about. And again, this is really nasty in here. The more that it respects this area, right? If you go from low to high, 50%, but also the overlapping fair value gap that's being inverted, the more that the bodies respect that, right, the more likely I'm starting to believe it is to see this go lower. Right, short term, right? That's counter trend. So the classification of this being a bullish trend, but short term having a little bearishness to it to come in scoop liquidity or target some internal range liquidity to build counterparty to their buy positions. You know, the more likely that becomes on this lower time frame, the more likely it is that they're going to reach into this. Okay, and that's totally fine. That doesn't upset anything. Sometimes you got to wait for price to get in line. Time and price are the two most critical elements. Time being what part of the session we're in and macros, right? Are we in a kill zone? Are we in a macro? And price being liquidity and PD arrays, right? Simple as that. So you got to have those two things align, right? And you look at the higher time frame where we're at, you couple that with internal, external range liquidity relationships, and then you use the current price delivery and how the characteristics are in relation to a PD array that you're observing for real-time order flow. And if up-close candles are being respected and price is going lower, if fair value gaps are being inverted, if bearish fair value gaps are holding, if wicks, when they get traded into, the 50% is being respected, if highs are being swept, but then immediately we see price declining aggressively, all of that is indications for bearishness. And if price trades into PD arrays that are bearish and the body closures are staying below the lower 25 or below the 50% level, either one of those is fine. If it stays in the lower 25%, it's more aggressive. But if it does that and you can observe that relationship, that's real order flow. You don't need any indicators. You don't need anything, right? You could turn everything off and have a naked chart and just go from higher time frame, wherever we're at, and then use the PD arrays and the current liquidity pools as your overall observation, right? And it tells you everything you'll need to know, like literally everything you need to know. You think of Power 3, right? The dynamics within that. You think market maker models, okay? And you get a very, very clear picture of what price is trying to do, all right? So these are very, very critical things. Obviously, it's not like the most advanced, but again, you don't have to be overly complicated. If you are overly complicated or you use too many things at once, right, and you haven't really back tested a lot of those things, you're going to have analysis paralysis. Like if you don't stick with one model, like ICT says at first, and you're trying to learn 5 at once, and you don't have like even a lot of experience using one, I mean, you can imagine every model has its own characteristics, its own validation, its own confirmation, right? Its own supportive ideas and its own continuation variations. And it has its own situation where it works the best in, right? All the different models. So if you're trying to merge all of them together because you think that's just more opportunity when one hasn't even been mastered, doesn't it make sense why you end up at analysis paralysis? It's like going to a job, your job, and trying to do everybody's position from CEO to what it is that you do at your job. And you have like a week experience and you don't really know like a lot about the business. I mean, can you imagine how insane that is? That's exactly what students are saying when they come into this and they try to learn everything at once, do everything at once, all the models all at once, every 5 minutes. It's no wonder that you hit a brick wall. And then you do that for months and it feels like you don't make a lot of progress. When you could have broke things down, learned each concept individually, and over time you learn where it fits in the narrative inside the daily range. And then at some point, right, you'll look at the chart and feel like you understand everything. And of course, having a community like this to help put this on full display, right, and really amplify these ideas and how to study, like the most effective way to do things. I think it's super priceless. and being able to borrow experience from someone that proves it, I mean, it's the best way to learn. You know, not getting a course and being told to just figure it out, right? Where, you know, the person's course that you buy, they don't even answer questions, let alone prove anything live, right? It's very important that you learn from the right people and do the right things. So, you know, if you catch yourself doing any of the stuff that I just mentioned, how you're like throwing the kitchen sink at everything, you're just doing everything at once, and you're hitting analysis paralysis all the time. You know, I encourage you to really consider this stuff. You know, break it down one by one. Build a journal, have a Discord. Well, for those in my private group, now you guys can do this in the journal. This is what I was thinking of when I was adding additions to the initial journal. Which, by the way, the inception of the journal idea and how it's like how to structure it to get it to look the way it does. Literally, my fastest learning student is the one that showed me the capability and how to build it. Shout out Harley, by the way. He needs to start posting so I could shout him out even more. Oh man. The students that I've crossed paths with, they have added so much value to the community. I couldn't be more grateful. Without them, there's a lot of things that wouldn't be happening, right? I have my skill set and the wisdom and knowledge and experience, but everybody has value, right? And that's on full display with the students that are in my private group. And you guys here on YouTube, right? You guys give me ideas and whatnot too. And we're bringing them to life, and we're helping a lot of people. I think this journal that has been created, though, especially since I'm turning it into an app, which is going to happen today. I mean, it's going to be super dynamic. Everything that you do trading wise can be shoved inside of it, and then of course you can have your Discord for other things that you want to do. Eventually, the app is going to have the community in it too. Yeah, Jen, shout out Harley. Absolutely amazing young man. Fastest learning student I've ever had, from like 3 months experience to profitability. And he's not even, I don't even think he's 21 yet. I think, maybe he's 21 this year. I got to double check. Sorry, Harley, if you listen to this. But yeah, if you do listen to this, or Harley, if you're watching, bro, thank you for all you've provided to help me make this community even better. And whatever you do, you know I'm here for you too. So yeah, absolutely amazing student. I have many of those types of students. But everyone learns in their own speed, right? And I hope that some of the resources that we're going to be coming out with, from the indicator, like the algorithm that spits out setups, to the journals, you know, other future PDFs and other resources that I'm going to create. Hopefully that stuff can help more of you guys really have a graceful learning process. I think it's pretty good now for those that really take this serious and pay attention and do what we talk about. Not only me, right? I have students that are really good, so they give advice as well. But if you guys just listen, you're in proximity to students that prove it, and you have a mentor that proves it. Not only ICT, but you know, me here live every single day, every week with you guys here on YouTube, right? So you're in proximity of something that works. You're around people that are willing to just open the floodgates of information, right? In a you know, we try to make it simple. I try to make everything that we talk about that may be complex simple, like COT and seasonality. Like, those things can be complicated. People overcomplicate them. And if someone is teaching something and it's overly complex, and they're a teacher trying to teach somebody, then they clearly don't know exactly what's going on, right? Because it's overly complex. You can simplify complexity through mastery, right? At least that's what I've been able to understand from my own studies, right? It's complicated to everyone at first because they don't know what to truly do. So everything they talk about is overly complex, or they're doing it on purpose to sound smart so they could sell you something, right? And many times it's not worth even listening to, right? Especially because they don't prove it. Yeah, so you guys notice that I'm not really paying too much attention to the chart at the moment. Like I'm not pointing anything out too aggressively. It's because when price looks like this, I don't want your attention on where's an entry, right? It's more so we're waiting now, right? We're watching the PD raise. We've outlined things that we want to watch. I think of that. Is that the order block? I think it was. Let me actually grab this real quick. Okay, no question. Good morning, George, by the way. George, I sent the journal to you as well. The upgraded version from the first version, the Harley sent. Kind of added some extra stuff, a lot of new features. And if you go check in the one-on-one student notes section, I actually have a PDF that I created that tells you all the different alterations. There's also info that pops up on every single bubble. So it tells you what it is and why it's important and whatnot. Okay, yeah, started today. Started today for sure. No worries, George. I'm going to continuously improve it. And again, I'm going to turn it into an app today. So you guys will have access to that. It's just going to be a link that you click and then it'll pop up and you could save it to whatever, like your desktop or on your phone. It'll have the WMG logo. So it'll be a lot easier to launch. So, oh yeah, whoops. Sorry about that. Sorry about that. Go goo. Sorry, bro. We got into a lot of stuff today. My bad. Kind of neglected the other assets, right? So yeah, ahead of this open price here, hopefully you guys know what we're talking about with the indices, what I'm looking at, what we're watching. This here is the 50% here. But from the weekend, really nothing has changed. If you were here for the Sunday call, it's very important for everyone to show up to the Sunday calls or at least watch the replays because we lay out what's going to happen and what we are going to pay attention to throughout the week. But overall, right, we've been saying the price is going to go higher. If you take this fractal high to that low, put an extension on, we have 2.5 standard deviation. That may be a cause for a small retracement to take place. Again, the indices have the foreign currencies that are pretty solidly correlated with the bonds, right? And they also correlate with each other a lot of times, sentiment-wise. Not like tick for tick, but sentiment-wise, I mean, it looks pretty much like it's the same as the other assets, right? So it's all the same opinions. And then, of course, we already take that high for GU. Yeah, so we got relative equal highs here. We have another relative equal high up here, could end up becoming a target. Again, because it's so overextended, we got to keep in mind that there may be a point in time where we get a small retracement. So we may have to utilize that, right? So we got relative equal lows here. You know, maybe it looks to go down there. We'll see. It looks very, very bullish at the moment. And depending on what dollar does, right, I think it's gonna have a heavy influence as it always does. Yeah, in terms of this, I personally for this I would need it to come down a little bit before I would look to try to get in. Otherwise, you could be chasing price. It's rapidly rallying, so I'd prefer to see us come down into at least this, maybe even this, tag that, and then give us a change in state on the 15-minute or 1 hour, and that'll tell us that it's now time to get back in line with the narrative. But from price being up here, going down into one of these levels, that in itself can become an opportunity. So depending on what happens going into this open price here, we could see that London set the low here. We had accumulation, manipulation, distribution. So we may get the New York session slight reversal to come in, maybe tag some of this equal low here. I would really like that, like shoot a wick through that, then give us a change in state. Maybe even, overtake this fair value gap, trade through it, and then get back above it, reclaim it, and then go. That could be another scenario you could look at. But when it was to come down to these lows here, if it does do that, if it hits that and displaces aggressively, we'd have to be cautious because it may look to try to come down even further and maybe even try to sweep some of this out. Something I see on the EU though, right, we have this here. So if it's going to be bullish, right, maybe it wipes these equal lows out. And then it looks to continue to go, right? That'd be a reasonable thing if it's going to continue to rapidly go higher. We do see these equal lows here that could be an issue. So if this ends up displacing aggressively, and say this high to that low's 50% gets violated, this may turn into a small market maker sell model. And then if we can get it to trade down into this level, that would be a potential area I'd look for an opportunity in for the second stage distribution, using this as the accumulation or consolidation, accumulation, reaccumulation, smart money reversal. And then once it breaks this low, right, we could look to frame that out as a second stage to try to take this out. That this is all happening though as a counter trend move if it does do that. Ideally, it's going to continue to go higher and it's going to respect this, right? So 50%. Ideally, right, best case scenario, it looks to respect up to the wick midpoint here. So this little area in there could be looked at as a potential support level. You see this here, this low on the 1 hour, it did sweep that low. If it gets below this, like it displaces, you have to keep tabs on the midpoint there too. It's aligned with this. This wick here, I believe, is this wick. So large wick followed by displacement. No, it could very well support the fact that it's going to take these equal lows out. So again, I'd be cautious because of how fast price has been, right? Whoops. So we got London. London has been very aggressive, one-sided. So fast London leads to New York session sometimes playing games. So something to consider as we go into the open. But again, if it's going to hold and go higher, we're going to have to see it hold this level. But if it gives that up, right, and displaces through this 1 hour low here, which is here, and then violates this wick midpoint, again, you have to consider the fact that this might become something that needs to be used as counterparty. And then whether that's like a full-on reversal for the day because it's going to trade into the previous day's rapid buy-side delivery, right? That could happen. Today could be a bearish candle. Does that change the narrative? No. Right? But if I was looking to try to participate in this asset, I'd be anticipating, okay, well, let price come down a little bit, let it tag some of this, and we'll see if we can get a change in state of delivery here, like an order block that gets traded through again as it taps into this. Preferably, we want to see a response like that from a macro, right? So, we'd wait for the next 30 minutes, at least 20 minutes, get us into the coming macro, and then we can make a decision, right? Especially because it's such a fast London. Same thing if it was a fast previous day, which it was. We have both scenarios. Fast previous day, very aggressive previous day, and we had a fast London. So what do you think everyone's trying to do? Everyone's probably trying to buy. Where are their stops at? Well, below this low, and even more so below these lows. This is relatively equal. And that puts us just in a simple retracement. Right, if we go to the 4 hour. Yeah, see the lows down there? Go to the 8 hour. It would just simply be a retracement into that fair value gap. And then as long as this high to that low's midpoint doesn't get violated, we may still look to see price go higher, unless it inverts this level and then comes back into it, respects it, and then goes. Those are early signs, and we wouldn't really need this low or the midpoint here to be violated to determine it's going to go lower. But yeah, these are my thoughts on the GBP USD. And we're looking at the dollar. If dollar rallies, again, it just reinforces that this is going to go lower. We have a new week opening gap here for the pound and GBP. So again, 70% chance it hits the midpoint. It's the same thing with the indices here, but look how crazy that is. Okay, so yeah, we got that displacement here, took the low, now it's rallying above the highs, so it's continuing, it's going to continue to go higher here off this. Again, I'm going to let the first 30 minutes pass. I'm not going to participate in this. I want to see what happens. All right, so the news at 5:30 didn't really do anything. It's used as a pump fake, dragged price lower, and now we're at 6:30, so it looks like they're giving it up to go continuously higher here. That's the narrative overall. Anything that was to the downside was going to be short-term in nature as part of a counter trend trade. Again, this high to that low, look at the 50% I said needs to be held on a closing basis. It can reach down into that, that's fine. It doesn't upset anything, right? And now we got this immediate turnaround, and we could see that it's just continuing that higher time frame narrative that we were more focused on. Unless it was to break this, our objective was to be bullish. We could see the SMT is firing aggressively too. So there's clearly SMT there at multiple levels. So that coupled with the higher time frame bullishness, coupled with the previous week's high, is DXY going lower? No. The overall sentiment is still bearish, so it's going to continue. That's supportive of this continuing to go higher. So what the indices are doing, it may fall in line depending on what the dollar does, right? It may make these fall in line, right? It may just, like I said, be a sweep, right? A retracement into a discount level, discount PD array, going against what London did, to then look to really pick up to the buy side. And again, we're purging out the main liquidity in that level. So we got low, we got high, low, higher, high, change in state of delivery from the midpoint of this range at the upper portion of the regular trading hours gap, and a failure to get to the midpoint, right? Failure to get to the midpoint followed by change in state of delivery. Nothing in here is telling us bearishness for the time being. And again, the level that I mapped out that would show us that it wasn't going to be bullish never got closed below, right? So what is the result, right? What should we be thinking? What is our focus remaining on? Buy side delivery. We have a wick in here. If you could see that, I'm not sure if you guys could see that, but this wick in here, that is beautiful, right? The midpoint of the wick, upper 25%. If it stays in that upper 25%, we continue to keep going higher. If you were in a trade down here, right? There wasn't really anything to really engage other than turtle soup. But this wick in here, as long as it stays below, or as long as it stays above the upper 25%, above that 50%, right? Order flow is going to keep going higher. I'm kind of curious to see what's going on in the other setting. Wait a minute. So yeah, we're just going to keep going higher. See that? High, low, higher, high. Same thing here. It's going right to the target that we laid out up there. That's the main target for the day. Got the wick right there. So overall analysis, assuming what it was going to do, favoring buy side unless it was to violate this, which would have then triggered this in as a target. Never close below it. Immediate rejection, shift in market structure, change in state, and then just continued rapid movement. We see that the news this morning was used to push price lower. So like a pump fake, like, oh, I'm going this way. And then 6:30 came in and did the real move. Again, I already set the rule today for my engagement protocol. I'm not taking a trade right at 6:30. It's just the way it is. So any situation in here, you know, I mean, there's an argument for this, right? Off the wick right there is a continuation signature, especially with the confirmation of S&T. Higher time frame levels are continuing to hold price and go push price higher. The clear draw on liquidity being those equal highs, right? We had to have a consideration of this possibly trying to get into this, but clearly this denied that and took it off the table. You know, triggering this by closing below it would have really instigated that move into this fair value gap. But again, that's counterparty liquidity or counter trend liquidity. That's not really anything that it's not a main focus for us. But it was a possibility given the fact that external was taken early and the price was declining. But 6:30, right? This is why you wait for 6:30 a lot of times. This is why I wait. Because a lot of stuff can be derived after that 6:30, right? Again, an aggressive execution in here could have been fulfilled. But I'm, you know, willfully allowing it to get the hell up out of here. And I'll look to engage a little bit later. Let's see where it is. So didn't offer it there. Wonder why. So yeah, it's rapidly moving right now. So I'm gonna be letting this go. See what happens closer to the macro, which is in like 7 minutes. What's that? The hell is that? So yeah, I'm curious to see what the response is going to be because now we swept the highs up here. Again, there's nothing wrong with this in here. Right, like that wick right there, it's showing the signature that we always talk about with the wick, right, when it trades into it. This right here is the wick model that I teach you guys in my private group. And then, of course, like I said, you couple this with what was happening up here. There's a refusal to get into this. So what is that telling us? It's highly bullish, right? So until this changes, I would say until this high to that low, that 50% level gets violated, you know, it'll look to continue to go higher. So we'll see right here how it treats this up movement. I want to see if that's a wick of some kind. Yeah, it's a wick right there. So we've already purged out 2 significant liquidity pools up there, right? So when it does this around levels like this, especially if it's been really aggressive, you have to consider the likelihood of price coming back down to try to sweep something up or target an opposing PD array like this. Because we got external range taken, so almost every single time when external range is taken, it's going to immediately look to take internal range in some capacity. All right, so nothing tells us it's going to be bearish unless things start to get violated. Right, like if this gets displaced through, if we get this up candle turning into a change in state of delivery, if that happens and this candle here ends up getting us down into here, the objective is the low right here. the 50% of the regular trading hours gap. And depending on how it blows that out, you know, we may have to consider this too if it does get down there. But those are contingency plans. And if this gets below this here too, you could trust that it's probably going to retrace. We have a 4-hour fair value gap that it could reach into. And then if it runs up into this, respects it, creates a change in state of delivery, or an inversion fair value gap, or, you know, whatever else in that area that we can use, then that could be reliable. But as long as it stays like this and it stays above PD arrays like this, as long as it continues to trade into wicks, into order blocks, into fair value gaps, and it uses them as support, you know, we have to continue to trust it's going to keep going. You don't pick a top. Like in this instance, we wouldn't pick this top. At least I wouldn't, right? Unless there's SMT at the highs, and it, you know, makes logical sense, right? Like if there's an SMT up here, say the S&P has a failure swing, and then we break down right below something like this, see a change in state off the heels of the stop run with SMT inside of a macro, right? Those things can help you align yourself, you know, especially because this is a higher time frame reaction up here with a potential high being picked. But I personally, my style does not really, I don't really like doing that. I like to see, you know, whatever price is going to do, I let it unfold. I see it unfold, and then I wait for things like changes in state, shifts in market structure, you know, buy side being delivered, then sell side being delivered, right? And then I look to execute after we have that stuff in the back end. You see this huge wick in there? That's a strong immediate rebalance, right? So unless this breaks down below this, right, it looks like it's respecting the upper portion of this. On a body closure basis, we are above this purple line, which is the previous week's high, the first one that we targeted this morning, right? We're right up into it. Now we're above it. So we also have an immediate rebalance. So we got to consider what are the next upper levels it could be reaching into. We have this gap in here. Something you want to observe here is the new week opening gap. I think I need to make this color a little darker. I have a little bit of trouble seeing it. There it is. So we've got a new week opening gap here from February 1st. So that's something that we're going to utilize right now. So yeah, price is reaching into that. So that is the next potential objective. Okay. And then again, it's got a fair value gap up there too that kind of aligns with this right here. Go to the daily chart. Let's see. It's actually an order block there too. Just keep in mind what we're trading into, that's an opposing PD array. It can very easily trigger in a rejection. Maybe short term, but all of this is just, it's not telling us that rejection's happening. We'll see what happens when we get up here. Otherwise, it'll just keep going. This immediate rebalance, we love to see this. That's a highly bullish signature. Go to the 4-hour. Current 4-hour candle is rapidly continuing higher. The next 4-hour candle, especially when it hits this level up here, yeah, you see it's continuing. Nothing's told us that it's going to go lower. So any ideas that would be considered are buy-side ideas, right? Right after this took place, it's nothing but buy-side. It put the possibility of these lower levels being taken, at least at that time, on the back burner, and all the bullish ideas that we observed that would continue to support buy-side, they've just continued. So now we see that this wick was respected. So now we have this big wick. So now this candle, we got to watch. When it trades into this wick, if it's going to be bullish still and trustworthy to be just that, we would prefer to see it stay in the upper 25% on a closing basis. It could wick through it. It could wick back into this. It could even wick and take this. But on a body closure basis, preferably it stays in the upper 25%. Another best case is just simply above the 50%. So if I was in a trade here, this is what I'd be thinking, right? Is any of that stuff disrespected? No. Right now we hit the new week opening gap in here, so we got to be cautious because that is an opposing higher time frame PD array. New week opening gaps many times are volume imbalances on the higher time frames too. Like if we go to the daily chart here, you can see it's a gap right there, right? Got the closure here, the open. So it's a gap. So yeah, we'll see what happens here. And again, as it trades up into this stuff, right, we can also actually break this previous new week opening gap down. Break this up into quadrants. Gap measure. Oops, there it is. Okay. So as price goes into this, we have our different levels to watch. But again, I'm very interested in seeing what the response will be here. If this leads to this wick here getting totally shot through, we'll have to look at it as a potential inversion. And then when it trades into that, that'll help us determine whether these lows are even likely to be traded to, or if we'll just continue to keep going higher. For now, I'm anticipating that yes, there may be a response from here. Maybe it gives a little retracement. Preferably if it's going to continue to be trustworthy to the buy side here, and this leg is going to keep going. Again, the midpoint needs to be respected. And immediately, if this gets traded through, depending on how aggressive it is, because that'll be a wick followed by displacement. Many times that's a balanced price range, right? We got the buy side here, then sell side. If it overtakes to this level, order flow short term, in my view, we'll have to adjust, and then it'll look to target this. And then that would be where I would consider short positions. Otherwise, it's all buy side. Because we hit this level, again, you got to be considerate of the higher time frame opposing PD arrays. Because when you're in a trade that's moving, in this instance, going higher, when it hits a counter PD array, that's where counter trend trades unfold. That's where retracements unfold. So we could very easily see this given the 4 hour, how there's a gap right there, right? It could easily use this new week opening gap as the counterparty PD array, plus the liquidity that's been purged up here to then try to suck those traders in and get them down into this gap before it looks to continue to go higher. Why is that a possible idea? Because it's been so aggressive, one-sided. Price does not just go one-sided. So that's where the risk is in today's delivery, right? The risk of retracement is real. So how do we determine? Well, you got to watch these levels. In real time, you continuously gauge, is it still respecting and going in the buy side direction? Is this counterparty liquidity pool and PD array rejecting hard, breaking through PD arrays that should be holding order flow to the buy side? If that's the case, right, we have a logical idea if it does break through. If it holds these levels like it is, which is what I'm going to anticipate here until we're proven otherwise, we just keep looking for ideas to push price higher. Right? Now we can go to the 1 minute here. See this wick that I just highlighted? Right? It's also an inversion fair value gap. So again, high, low, higher, high. Midpoint, which is here, should be respected if we're going to keep going higher. So it's not showing anything just yet that price is ready to turn. On a body closure basis, look at what's happening. Right? We're now above the highs up here. Something we've got to think about, right? People see that a high gets taken and the retail logic is very heavy right here, right? Buy side taken, right? Resistance turns support. So because that, that's how retail thinks, if we were to get down below this low here, you understand that they're being victimized. Those are people being victimized right now. The support and resistance traders, right? But again, that risk and flexibility is only going to be required if we get down below here, right, to then start seeking sell side. Right now, we got to just wait. We got to wait and see how it treats this. We're now finally in the macro. So now we are stalking potential ideas. So we'll see what happens in here. This is definitely an inversion in here. And if it's going to keep going higher, right, we're going to have to continue to remain above it like this. So far, it's still supporting that idea, which is a wick, also an inversion, fair value gap being bullish. So that is more so what you look to trust at the moment. You know, it is pretty rapidly moving. And we had a really, really nice sweep right here. So again, nothing's told us yet, order flow wise, that things are going to go lower. Right? We have our levels laid out that would then trigger in our interest to go lower. But none of that has really came to fruition. It's just rapidly trading into that new week opening gap. Kind of slowed down a little bit in here. So we have a high here, a low that swept this low, the wick being respected. If this gets above this high, this becomes a breaker continuation. High, low that sweeps the previous low, displacement above this high, that's change in state, and it's a breaker. If we have this high, low, high that fails to take that high, and that's followed by displacement through this low, and we break through the midpoint there, that's telling you that buy side is at risk. And we've already, if this happens, it's also happening at a time where an opposing PD array was hit, new week opening gap, previous week's highs, aka external range liquidity, was taken, and then we have the failures in here to continue to go higher, right? Assuming that it was to get down below this. Those are things that would tell us, okay, it's time to look for the other side potentially, right? And then of course that would be justified by this level here, right? The buy side being swept, external to internal, and then once it hits that, back to external. This is how you flip around in terms of your thinking, right? From one view to the next, how everything works together and creates that succinct picture. Can know first presented for value gap. Oh yeah, of course, always. Always. Right, that first presented is here. Normally, Jen, I have the indicator on, but I didn't turn the indicator on. But yeah, you can see, that's another thing too. That's a good point to bring up. So this first presented fair value gap down here, if this was to break these levels and then get below that, that right there would be the easiest setup to then target the lows down here. That would be super, super easy setup. First presented fair value gap inverted after we took previous week's highs, multiple, and hit an opposing higher time frame PD array. So if this gets down to here with that back end information, plus we have the 4-hour internal range liquidity to target, that would be the easiest trade setup potential. I mean, there's lots of stuff on the back end that supports you in that regard. Maybe that's something you'd like to use, right? Maybe that's something you want to wait for. I wouldn't mind waiting to see if that takes place, honestly. I tend to use it like that. Yeah, exactly. That's how it's supposed to be used, right? That's how it's supposed to be used. And then every hour has its own first presented fair value gap too. So you could use it in a very similar way for every hourly candle, every hourly range, right? So that's something, if you haven't studied, I encourage you to go study that as well. And then the silver bullet is also, you know, if you want to look at the 5-minute chart, you can also find these things setting up on the 5-minute as well. So you get that 5-minute chart, you look at the first presented fair value gap after the hour unfolds. And if you have bias correct, right, you can a lot of times catch moves just off of that overall perspective. So yeah. So if we come back over here to EU and GU, it's kind of stalling out, right? If the Nasdaq continues to try to go higher, go to this 1-hour chart real quick. You know, we'll have to see this go lower if these things are going to go higher. Yeah, we're going to have to watch this now. So we got high, low, failure swing, breakdown. So depending on how this candle closes using this, we may end up seeing an early sign. We may see an early sign that price is looking to go lower here. If we take this low out, I'm definitely looking for that first presented. And then when it breaks through that, that'll be something I'm going to consider. And then we'll take out the failure swing here. And it should be able to target it in low resistance fashion, especially because we've already triggered liquidity. It just looks beautiful, huh? So yeah, it's definitely something I'm considering. This high, low, higher high, or a failure swing here. Let's see, is there SMT? No. So yeah, that failure swing right there, we want to pay special attention to this down candle. If it is going to go lower, when it trades into that on a closing basis, the body should show that that's being respected as a mitigation block. That'd be an early sign. Again, this could turn into a small market maker sell model in itself, right? Aside from, price down here. This accumulation or consolidation, we have accumulation, reaccumulation, right? Well, this is pretty solidly part of the accumulation. Smart money reversal, creating a mitigation block anchored at a opposing PD array to this uptrend, right? And if price breaks down below this, right, that's a wick, but it's not only a wick, it's also a fair value gap that if it's going to go higher should hold, right? This mitigation block, high, low, failure swing, breakdown, that down candle here should not be getting closed below. It should be very easily slid back through to the buy side if it's going to be continuing to be bullish. Again, London was, pretty eventful, right? It had reasonable amount of delivery. So it's kind of causing somewhat of an issue in here. It's not really too dynamic. This was a pretty dynamic run up there. And again, the wick right here, there's nothing wrong with that execution there. I like to wait for the 630 to pass, get that first information. And again, if this breaks down below this, I'm not necessarily going to be interested in buys again. I'll just look to try to find this, and that'll be where my potential setup will unfold. All right. So this is kind of what I'm doing. We have nothing to really worry about, nothing to be too overly stressed out about. We'll just see what this is going to want to do here. If it inverts this or reclaims this, let's see, do we have we got a different one right here too. We got the potential inversion right there. So yeah, you see how it's respecting that, the bodies. This is an early sign that things may give it up. We got the mitigation block being respected, body closure basis. Again, we have that 4-hour fair value gap that looks very, very nice. And we have this failure swing down here. All of this liquidity. This is a more pronounced pool of liquidity that I'd like to see. Is that London? Yeah, London's lows down there. If it does get super excited, we have London's lows in conjunction with that 4-hour fair value gap. And we have that regular trading hours 50% level. All of this will have proven to be manipulation. Again, all of that opinion for us to get down to here will trigger once we take this low out. If you look, we have a low, high. If it breaks down below that, we have a lower low. That's a bearish breaker. So that bearish breaker could be an aggressive idea if we do see dollar trying to go up a little bit. We have a decoupled market right now. We have the dollar going lower pretty aggressively. See, it should result in this going higher. So if these go higher, right, again, we may see this very short-lived to the downside here. So yeah, we don't pick tops, right? Preferably we stick to buy-side delivery. Anything that is counter trend, we're going to have to be very nimble, okay, and not be demanding too much. Right? Get your 20 to 30 and get out, right? And again, I don't encourage you to take any trades that I give because I'm not a financial advisor, same financial advice. But if stuff makes sense to you, right, you can go ahead and make your own decision. So yeah, let's see what happens with this. Let me keep this clean like that. So again, this had new week opening gap up there. Beautiful respect to it, huh? So yeah, it looks like we got another change in state here from the 15-minute. So change in state of delivery right there. So it looks like there was just a very shallow retracement for GBP. Euro seems to be holding the levels that I said it should hold if it's going to keep going. Not sure what that is. It's a liquidity pull up there. And now we're starting to see somewhat of a weakness. It's decoupled, right? The Nasdaq is definitely looking like the weaker for whatever reason. The Dow is the strength holder. So yeah, if dollar's going to keep going lower, things are going to snap back at some point with this, especially if all the other indices go higher. You know, we should be able to see price get back above this and reclaim that. And again, on a body closure basis, let's see as we move up in time frames what this looks like. Got that wick right there. It's more so using this high here, still holding on a body closure basis relative to this range that we talked about earlier. This high to that low, we now have 50% of that needs to be respected, right? It's about right there. Preferably the upper 25%. So it looks like that's what it's going to continue to do. So we'll stick to the interest to see if a buy can be presented. Yeah, if it takes this high here, that'll be a trigger for me. And then we just look for our model. And then that'll be a proven respect to this down movement here. So far, the Nasdaq, at least, it's not necessarily looking like it's ready to try to go higher. And again, if it breaks this low, I will immediately look to try to adjust my thinking to these equal lows here. So yeah, we'll keep tabs on these. See the body closures relative to that fair value gap? Beautiful respect. Got a down wick displacement, got the midpoint. You notice the body closures there. We need that to stop if it's going to be trustworthy to the buy side. Again, we have this mitigation block. It's clearly being respected, at least up to this point. What's a mitigation block? We have a high that takes liquidity, a low, and then a failure to break that high, preferably in a PD array that can result in a response away from it. And then we got price trading up into it, and that last down candle is being respected. So yeah, you see what's happening here. There's decoupled market conditions at the moment. The DXY is dropping. The Nasdaq is dropping. So that's low probability automatically because of the decoupled effect. Does it mean it won't work out, right? Or that you won't be able to determine something? No. It just means that some of the very powerful confluences that we use to really get behind a move and trust it, some of the stuff's kind of disjointed at the moment. I mean, you could imagine why, because of all the stuff that's happening. But we'll see. We'll see if it could present something reasonable. Again, we have this fair value gap here. And then we also have the upper fair value gap here as well. So that's an inversion, bearish. You can see the price is staying below that, but it's also staying above this high to that low. We're stuck inside of this little range here. So we got to see which one is it going to give up. If it displaces up here and breaks this, a return back into that could be probably used, in my opinion. I'll probably use it as a reclaimed fair value gap that I could then take, beyond the highs. If it was to break down below this, right, I'd be expecting a reversal into that, see if it can give a response, and then try to consider this, depending on what the dollar's doing. If this continues to drop in the dollar, and then this continues to drop, I will elect to stay on the sidelines. Now, I won't really want to participate because at any moment they could flip the switch and this can end up doing something like this. And the risk environment we're in right now, it's better to be conservative. I would ideally like to see the first idea, right? This retracement, get back above this, turn that into a reclaimed fair value gap. We also have the bullish order block here. So if we could see that it gets above the midpoint, and on a closing basis, we stay above that midpoint, that would be great. But yeah, we could see that it's having a hard time getting through that. So it's just not necessarily super trustworthy at the moment. And I'm not a gambler, so I'm not going to take a gamble. I'll wait. I'll let price open up a little more if needed. We're inside the silver bullet window. So what is the silver bullet model? You look for the first presented fair value gap after the 7 a.m. time. You could use the 1 minute, right? You can use the 5 minute. A lot of times it's better to use it above the 1 minute, but the 1 minute it still offers some pretty reasonable moves. So yeah, you see how it got above that right there? I like that. Dollar's continuing to drop. So yeah, let's see how that's going to unfold here. Is that the first presented? Okay, so yeah, we're actually inside the first presented fair value gap here, actually. So yeah, this is actually the first presented. This one was right at 630. Didn't realize that. This is actually the first presented fair value gap. So it's even more significant if this was going to trade below this and then reject into it. Right now that we're above it, we need to see that hold. So let's see what that decides to do here. Dashboard. So yeah, now we're looking at the wicks in here. Right, it's respecting it up to this point. I don't like how this just took the high there. So now we got S&T at the highs. That could be a problem. With S&T at the highs, if this ends up below this first presented fair value gap, that is going to have a very dynamic response. And that'll be the catalyst for us to get down to that 4-hour fair value gap, or at least start trading pretty aggressively towards that direction. But for now, we'll see, right? We're not going to pick the top. We'll see. For now, it's respecting this level. Like I said, it should. So we'll see how long that goes. See how much was offered there. So from that level there, if you would engage that, you would already be at your 20-point target. I said that if it gets above this gap right here, it should respect it and go higher, and that's what I'll be looking at. And that's exactly what I did. And then just for completeness sake, for those that like to know these things, okay. live account. Live account. No other trade setup. Said exactly what I was going to do. Whenever it turns into that, I will take profit, or I will target the high up there, and I will engage and take it up there. If it was to break down below this, I will look at this as a rejection level, a bearish breaker, and then I would have did the same thing, just the opposite, especially with this being the first presented fair value gap here. Okay? Easy peasy, 27 points. $26.75. I could have held it for longer, could have rode it up to the highs up there. But hey, I try to prove to you guys that you only need 20 to 30 points. Pretty much every move that we call out or everything that we hint to, well, most, and this is not an encouragement for you to take trades, but if you notice from the live calls, everything that we point to, well, most of the stuff we point to, it generally goes in that direction. And the only target for someone on their demo account, okay, if you are engaging, is 20 to 30 points. If you're taking my opinion and how I think you should operate, all you need is 20 to 30 points. Don't make this difficult. Don't overcomplicate concepts. Don't have like 5,000 mentors. Okay, don't try to mix, Joe Schmo who does supply and demand, quote unquote, with ICT, with trend lines, with the MACD. Like I need all of, like, don't have that perspective. Pick one that you're going to stick with and then live there. If you're here, of course, I'm biased. I'm going to encourage you to trade purely ICT concepts. It's just better. It's just better that way. And it may not work for some people, and that's fine. But hopefully what we do here makes sense to you guys. I don't make it overly complex. I'm obviously very honest, right? If I don't see something or I want to kind of wait a little bit, and I'm not willing to engage, I tell you guys that, And in this instance, right, we had one level here that would trigger in my interest to go short. But up to this point, it never triggered that. So what was the objective? Get up above this fair value gap, like I said we were waiting for. Once it tags that, right, if it trades through it and tags it again, that's what I will be aiming at. And that's exactly what we looked at. And guess what? It's exactly what happened. And it offered well above 20 points. It offered 32 exactly. All right, 32 and a quarter. Right? And look, nothing has changed the overall opinion of what's happening. This should be able to continue. We now have a high, low, higher high, midpoint of the range. It's being respected. Have we got down to that? What about this wick? Did the bodies close above that wick and start pushing? Did we change state of delivery again? Yes. Has any of this lower portion been disrespected? No. So what's the objective? Pick a top? No, absolutely not. Continue to push it higher, right? I laid out the moments or the places in price that would have allowed us to then go for shorts. It never hit that. It respected, on this decline here, it continued to respect this high to that low's midpoint. So we're traced into it. Body closure stayed above. Upper portion of the regular trading hours gap, and it just exploded. The wick in there, like I said, would have offered something. This decline in here created a wick, but it's also an inversion. This low, high, potential lower low that could have happened. Again, once that would have been triggered in, that would have turned off the buy side interest for me. Okay, so look, there's nothing wrong with this being an execution too. If you saw like all this happen, you're like, oh, I'm going to show up late. You're not showing up late. You wait for price to get back into this range a little bit. Watch the body closures. And if price changes state of delivery in that, we took stops. We displaced above the first presented fair value gap. Inversion levels being respected. High, low, higher high should act as a balanced price range because we got sell side, buy side. And then when it turns back down into this, as long as it stays above the midpoint, any change in state of delivery you see back to the upside like this, especially if it's aggressive, that's an opportunity for continuation. I never taught what I just said right there, but it's true. It's another way to use balanced price ranges and how to understand another variation of potential engagement. Balanced price range being respected, upper 25%, and then change in state of delivery. You can either wait for it to return back into it or put a limit order right there or right there. Let it blast you in. Stop goes below the change in state in the upper 25%. Or your stop can go below the 50% of the balanced price range. Now, I don't think that's complicated. I don't think really any of the models we talk about are complicated. Right? But that's bread and butter right there. From this execution here using the inversion, first presented, to the context, right, that supported it, our invalidation level that would have put us in position to think about shorts, which this would have became a target. It didn't manifest, so what happened? We stuck to the bias being bullish. We didn't pick a top. We saw SMT was possibly forming, so we had to, you know, consider it. But again, this never broke the midpoint. So high, low, higher, high. Let's take this price action and move up a couple of time frames. Wow, isn't that interesting? Wow. That's a bullish order block, huh? It's another reason why this would have been nice. But again, order blocks, breakers, those are balanced price ranges. Fair value gaps that get inverted like this, right? Sell side, buy side, it should act as a BPR. It should close inside of that. It shouldn't close outside. The wicks can go outside. Closure-wise, it needs to stay inside. And it did. Displacement, maybe you didn't like this one. Well, there's your higher time frame PD array. Right? It's actually a 15-minute. So 15-minute order block. High, low, higher high, bullish breaker. So yeah, again, what was the narrative this morning? We thought about the possibility for price to want to come down into this once it tags the previous week's highs. It tagged those previous week's highs, and we just monitored it and the response it was having as a result of that. All it did was give a slight retracement, and then immediately at the open, blast it off. The news was used for manipulation, but we had bullish power 3 to start New York Open. So the New York Open, power 3, which is another thing that does happen that you have to focus on, right? Accumulation, manipulation, distribution, rebalance, redistribution, right? Internal taken, external, internal taken to external, right? So yeah, just bread and butter. Nothing new, right? Nothing new. I'm curious to know if any of you guys were able to take an execution in here. Again, that was the main thing I was looking for. Right? So once it gets above that, that'll be where I look to execute. All this other stuff, I didn't trust it. The short in here, I didn't trust it. I wanted to wait for this to be taken. It was very aggressive, right, to start the session. So because of that aggression, it allowed itself to pause a little bit. And then once we got it back up above this first presented fair value gap, respected it, execution inside that, right when it tags it, stop below the first presented fair value gap or the midpoint of it. And it was off to the races. So that move right there, if you listen to what I was saying, 50 points was offered. If you didn't catch that one, you had another opportunity in here at the 15-minute revisit of the order block there. But on this 1-minute chart, it looks like a retracement. That's another potential idea. Now this too, high, low, higher high. When it comes down, it needs to respect the midpoint. This fair value gap should be left open if it's going to keep going higher. Good morning, Mike. Your question. Would you consider a razor model at 939 displacement? 639 you're talking about. This pullback displacement. And then this pullback to the first presented fair value gap showed the wick model. Talking about this on the 1 minute? 939. Oh, you're talking about like over here? Wait a minute. What's up, Fancy? The wick model for sure. I don't, at least on this time frame, I don't see the razor model. Mind you, this also didn't take out a low, didn't give us that stop run. It did kind of take the stop. Sometimes this does work, but the functionality is just the inversion, right? When it comes to the razor model, this right here, if there's a fair value gap in there, that would have been what you would like to see. There's no fair value gap in there, so the razor model is definitely on the back burner. Okay, you see how it's just moving? See how the fair value gap's left open, doing exactly what Daddy tells it to do? Yep. So you got to walk this stuff eventually like a dog, okay? You guys will. You know, a lot of you guys already do. But any of you guys that are new, I'm telling you, what we do here is not typical. So it's worth applying the stuff that you learn. But yeah, again, we could see that there. It got left open. I'm trying to look and see, Mike, where a razor was potentially forming. I mean, it's just not. It's like, it feels like you got to push it. Like, okay, well, where is it at? Like you got to force it. Whenever you feel like that, it's like, okay, well, it's not there. Right? In this instance, say it's not really there. Something that's like reliable. I mean, you could use this here. And then right there. That could be reasonable. I think that was only like 15 points though. Yeah, not even really worth it, honestly. You notice how the sells, overall narrative is bullish. Do you notice how when you look at price here, where are the more clean pieces of price delivery? Can you tell me? Let me know in the chat. Which is cleaner? Which side is cleaner? More clear, more dynamic, more opportunity? Given that it's bullish, and you're looking at the chart right now, if you were choosing to buy or sell, which one seems like it would have been more trustworthy? Keeping in mind that the higher time frame we've talked about is bullish. That displacement lower didn't take significant. Yeah, exactly, Mike. It didn't really take something too significant. It did take a previous hour, right? The 5 o'clock hour low. So it's just a simple hourly low that got swept. Again, on the indicator, since I have those custom slots, you can add certain hours. Like if you want the 6 a.m. time to refer to, or the 6:30 time to refer to the 5 a.m. time, right? Or 6:30, right? To refer to the 5 a.m. because that would have probably put something on the chart, right? If it is able to track the previous hour, which again, I've given you guys the option to do so, to add that plus the 4 hour. So, and then what is this? The 7 a.m. Let's see. 7 a.m. The 7 a.m. candle wasn't really by the previous one, fair value gap's low, or the previous 4 hour candle's low, right? It wasn't really close to it to sweep it and then give us that, power 3. But it did offer the power 3, right? If you go to the 7 a.m. open, notice how it accumulated, manipulated, and because it's bullish, it expanded. And once that happened, that was part of the, Yeah, that right there, that observation, yeah, I should have held that. Now that I'm looking at it. I don't know how that slipped. It slipped my mind. I was thinking about other things. But yeah, that 4-hour power 3 beautifully unfolded. And you could see basically the entry that was given here or talked about, that would have been right at the lower portion, right? This lower portion here. This is the 4-hour candle. That right there is at the lower portion of that 4-hour delivery. Right, that entry here, you know, targeting price going up towards these highs. Look at where the entry was at in this 4-hour candle. Beautiful. That is picture perfect. Preferably you like to get into the lower portion of the wick, right? But, oh yeah, freaking Jen held on to the trade. That's what I like to hear. Yeah, that's going to be an amazing screenshot. Don't forget to share it, Jen. So yeah, amazing, amazing. All right. I think that was pretty eventful in here. Again, that's enough of an opportunity. So, in all honesty, you know, if you guys took an execution in here, I mean, there was one right there, right? The initial one was here. The return back into the inversion first presented. Then we had that extra one here, which was part of the 15-minute order block. That's why it stopped right there. This high to that low, continuing to go higher. That is a market maker buy model. Right? If you go to this time frame, you can see consolidation, accumulation, smart money reversal, right? First stage distribution, second distribution with speed. So you see that little market maker buy model in that small retracement. But yeah, outside of that, right, again, you add this high to that low. Once it broke the high, if you're going to keep going bullish, if you trusted it going higher because a higher time frame is bullish and you're listening to advice that ICT says where you don't pick tops, right? If something is bullish, you don't pick tops. You wait for it to prove it, which is what the invalidation this morning was going to do, but it never got to it. So we stuck to the buys. Okay. So price continued to go higher, higher, right? So this was an opportunity. This was an opportunity. This was an opportunity. See the wick right there, 50%, not even being closed below at all. And we're leaving the fair value gap open. That proves it's a balanced price range. High, low, higher, high. Wick followed by displacement. Came down into it. The expectation is if it's going to be bullish, it needs to stay above that and keep going. Same thing here. High, low, higher, high. Fair value gap, fair value gap. If it's going to trade into that, the 50% should be respected, but also one of the fair value gaps should be left open if it is truly in a fast pace going to be bullish. And again, what have we targeted today? Previous week's high. That's right. Yeah, that's the right contract. So previous week's high here. Previous week. Now we got the new week opening gap in here as well. Can't map that out there. So yeah. Copy that, paste that one too. There's the new week opening gap. And here are the quadrants inside that new week opening gap that we have to pay attention to. Okay. Where's the 8th levels? There they are. Okay, so we have all these different levels in here. So this level here, notice the sensitivity, 25%, notice the sensitivity. Then we got this 8th level, and then we got the midpoint, 75%, and then all the way to the highs. Excuse me. Do such moves, inviting contrarian thinking, that's, it cannot go any, yeah, exactly. Oh, I love when people are saying that. Oh, I can't go higher, can't go lower. Okay. That's what you could think. That's fine. I'm gonna keep going. It could go as far as it wants, lower or higher. So again, until it changes with some of the things that we talked about today that would have changed our opinion, we keep pushing it higher. And it's okay to let things go. I let this whole thing go in here. Did I sound concerned? Was I worried? Am I ever worried about anything ever? Like ever? I'm never, like, it's never a care or worry about what price is doing, because I know it's gonna manifest. It's gonna show what we want to see at some point. And if it doesn't do it initially, we'll be able to find something later on once we get back in line with, whatever it does with our flexibility protocol and continuations, right? And if something doesn't get spotted in the session, we could come back in PM session or just come back the next day. It's nothing to be too concerned about. You know what I mean? So yeah, it's a beautiful move. So I think we're gonna cut it short today a little bit. It pretty much targeted everything that I wanted to see it target. Went right to all the levels that I thought would be a maximum. So now we got to consider the upper further targets. Once the price gets above this new week opening gap in here, think about it. We're inside of a market maker buy model now, right? The first stage distribution. This up here will become second stage distribution. And we don't want to see a deep retracement in here. We haven't even seen a deep retracement here either. So up to this high, right? We have accumulation, consolidation, accumulation, reaccumulation, big smart money reversal, first stage distribution, displacement, second stage distribution will be somewhere in here. Okay. This whole entire move up here, honestly. And again, once it gets above this high up here, if it comes back down into that, right, that last up movement, whatever the price is right there, that last up candle's closure, right? That should be the most sensitive point on a closing basis. If we do get up above that, we could see that's an equal high up there too. So let me actually put that there. It's also a previous week's high. You see that from February 2nd? And yeah, we'll get to the rest of it later on at some point. Okay. So yeah, let me know if you guys have any questions about anything. So I think we will go ahead and wrap it up for today's session. I mean, I think this was a spectacular session, from pre-session analysis and prep to real-time verification, studying price delivery, laying out the validation levels, continuing to hold on to the higher time frame, going higher, not picking a top, laying out a level or the levels where, price topping out here and then digging for a deeper internal range liquidity pool, right? We labeled that, what was going to trigger that mindset. It never really manifested, right? It just dropped lower, swept the lows, accelerated, sweeping the liquidity that was built from the news event. And prices just continued to rampage to the buy side. Should have held this trade, right? The minimums, minimums are great. But it's pretty much expanded dynamically. Hasn't given us any reason to not trust it. There was a pyramiding opportunity here at the 15-minute order block, right? It's part of this too, right? Stayed above this. Another opportunity in there, right? Price came in, respected this. And then even another opportunity over here. That's pretty far outside the macro, right? The deeper you go, but this was inside the macro. This was close to the macro, but the move set up in the macro. So it started moving away. Another opportunity was given inside the macro window. And then we also had this one that was outside the macro window, but this is an example. When the move starts in the macro and you have a logical target it's reaching for, you could still execute on things like this. And it should be able to continue to be dynamic. But if the move doesn't set up in the macro, and then you try, midway through the current hour that you're trading within to find a continuation, you may get caught up in some shady price delivery. So 25,930 EQ of the yearly wick. Oh yeah, 100%, 100%, Mike, 100% of the yearly wick. Yeah. Look at the quarterly time frame too. Get some levels for that. We'll talk about that tomorrow with those of you that are in the private group. We'll take a deeper dive at some of the new upper range targets that we're potentially going to be looking at. But yeah, new Fed chairs coming. The war in Iran, they knew, it seems, that the war in Iran having a failed ceasefire, everybody would be looking to pack on loaded short positions, because of the uncertainty. Because so many of the masses, including ourselves, thought that that was going to potentially be the response, price said, yeah, okay, you could think that if you want, right? It's like it determines what it's going to do, not us, not what we want it to do or think it's going to do. Price will tell us, and price has clearly told us that it's trying to combat that. So until that kicks in, we're going to have to just keep going with what price is doing. We don't pick tops and we don't pick bottoms. We let price prove it, right? And as long as 3 PD arrays stay intact, as long as the body relationships, when price trades into PD arrays, respect going higher. Every time a stop is taken to the sell side, it runs up. Anytime a bullish fair value gap is tapped into, it continues to push higher. Every time a bullish order block is traded into, or at least most of the time, if it holds and we keep going higher, all these things will continue to make us hold on to the higher time frame bullish delivery. And until those things start to get knocked off and the other side starts to get respected, until that happens, we're not gonna change our opinion. Honestly, Mike, what do you think my answer is? What do you think my answer is based on how you see me operate? That's a question all of you guys have to ask yourselves too. It's a very important question, right? It's a very important question. Again, it's obviously going to be very much determined, like your satisfaction is going to be determined by how big the account is that you're working with, how large the average trade can be, depending on your sized account. 20 to 30 points is scalable, right? So if you have $150,000 and you're risking 5-10 contracts every 20 to 30 points, right? And you take that down, that is much more meaningful and feels a lot more meaningful than it would if you have like a $10,000, $5,000 account. Those numbers are just totally different. But again, it depends on how big your size of account is. But at the same time, you could still mix in times where you hold price. But I personally, Mike, as you know, I take those 20 to 30 points. Shit, if it offers it to me, I'm out. Right? a lot of times goes in our intended direction, way more than 20 to 30 points. And if you guys are in my private group or been with me live here on YouTube and I'm telling lies and that's not true, just say it in the chat. No, he's a liar, fraud. He don't know what he's talking about. Right? Put it out there if that's if what I'm talking about isn't true. Right? But you know, it's not going to happen because it's all recorded too, so you can go look. But it's just the way it is. I live in that 20 to 30 point realm. This year, obviously, from the things you guys have seen me do, I've been expanding it. It's been more so 30 to 60 points because the volatility has just been insane. So it's been a little bit increased this year, but again, you don't have to increase it. You can live in 20 to 30 points. Take that and, like Mike said right now, go live your life. You don't have to worry about it, right? I mean, you can hold it a little bit longer, right? Get a little bit more. But again, if you have things to do, right, you're trading for freedom. You know, not to be ball and chained. You know, you're trading to buy your time back, right? And whatever that number is, you got to know what that is. Otherwise, the journey will feel like it's never ending. You feel like you never arrive if you don't have a specific prosperity goal, right? Specific amount of money that's needed in an account plus a specific amount of money that's needed per month to make. Not that you'll hit it every single month. You'll hit a little bit here and there. You'll hit a little bit over it here and there. And sometimes you'll go on a streak hitting it every single month. But, you know, you have to have what that number is. Like, what are you satisfied with? Is it 3,000? Is it 2,000? Do you just want to pay a bill or two every month? Is that your version of success? Right? Whatever that is for you, you know, it's still success if you're profitable and can do it regularly. You know, so you just got to determine what that is. Most people don't. They're just trading every day. They're just trying to win a trade. And they don't know where they're headed. So they end up nowhere. You know, so organize your goals so you know what you're aiming at. Because if you aim at nothing, you hit nothing. Right? But if you aim big, super big, you know, at least you'll hit, you know, something that's still reasonable. But if you aim too low, you know, you're probably not going to be able to hit anything. It's just not going to be meaningful enough for you to keep going. So plan your goals, know what that prosperity number is. Those of you in my private group, if you guys could send me a DM if you guys are here, think about that that question and send it to me in DM, or you could share with the private group community if you want. I'd be curious to see what that number is for all of you guys. See what the normal, what the average is, where you guys are, what you guys are thinking, right? I think that would be kind of beneficial. But yeah, so I think we've done enough today. Let's watch this in here. We are deep inside, somewhat deep inside this new week opening gap in here. Do got the midpoint right there. Maybe it's gonna try to slow down a little bit. It's definitely a possibility. We may get that thing to slow its roll. Damn, that's a pretty good eyeball, huh? Sheesh. So yeah, we got low, high, lower, low. It's a fair value gap. So you never know, right? This right here, we still got that fair value gap down here. It's less likely, in my opinion, because we've now gotten so far away from it. You know, we may still be able to get down into this, but that's just simply below these lows here. But yeah, so going into the rest of the session, I would keep my eyes on, you know, whether price is going to want to continue and try to go through the rest of this. But in all honesty, I think at some point we are going to get somewhat of a retracement, but we'll see, right? It is so exaggeratedly overextended right now. The risk of retracement is absolutely real. That doesn't mean you pick a top, but it does mean that you have to consider like, okay, well, if it does reverse a little bit, what could it be reaching for? And then whenever it reaches those levels, right? Maybe it's a gap, maybe it's a wick or an order block, right? If it forms one. Once it reaches those levels, you just wait for a change in state on the 15-minute or 1 hour, and then you can get back in line, right? Similar to this over here. Right? at a 15-minute change in state of delivery right there. After it hit an internal liquidity pool, staying above the regular trading hours gap, there is that regular trading hours that's still down there that's open. It's a wide open gap. See, huge gap. So they will eventually try to get down there. But then again, we are in a gap risk territory because of all the things happening. They may leave gaps. Eventually, they'll come back to them, but they may leave them. Okay? So, yeah, all in all, right, we did spectacular today. Beautiful buy from that first presented fair value gap we called out. So that whole run, if you held it, would have been a massive amount. I know Jen held it for a little bit longer, but that's a 80-point run that we called. And then, of course, the extra continuations that I laid out, showing you how you could have got back in if you didn't really trust this. But this was a beautiful, beautiful, beautiful move that we were able to participate in this morning. So hopefully you guys learned a lot today. Let me know if you guys need anything. You can always hit me up on my DM. I'm always willing to help you guys. But yeah, this just about does it for today. I think today was very eventful. I encourage you to watch the replay. And yeah, you know, everything from early on, us thinking it was going to potentially reach the previous week's high, came up and smacked that. So basically did everything that we talked about from the beginning. We did have the risk of the fair value gap here being targeted. It then proved that it didn't want to do that here. And then it was all upside as we predicted. So it's not nothing new, obviously. But yeah, again, if you guys have any questions, just let me know. We'll be live again in my private group tomorrow. Let's see, at around 5 a.m. again. We'll be back again at the same time as today, you guys. Again, those of you in my private group, definitely let me know how you like the journal. See if there's anything that you think should be added and whatnot. Shout out Harley, by the way, for the beginning stages of it that he shared with us. You are absolutely an asset, and God bless you, little man. Well, not so much a little man anymore. About to be 21, yo. If he's not 21 already. But yeah. All of you guys have been doing amazing. So again, I'll be here. I have to go see my daughter later. So I may not be around for like the next 5 hours, 6 hours. But if you send me a message, I'll be able to get back to you around that, around like later, right? Maybe like 7, 8 o'clock p.m. Pacific Standard Time. But yeah, again, those of you that do have the journal, if you didn't get a copy of it, let me know because I'll send you the new updated version. And if there's anything you guys need to have clarified, I'm more than happy to help you. So yeah, that being said, I will see you guys here on YouTube on Sunday, same time as always, 5 a.m. Pacific Standard Time. And those of you in my private group, I will see you beautiful people bright and early tomorrow around 5 a.m. as well. I will be up earlier, so if you guys want to hop on a little bit earlier, I'm more than happy to do that so we could kind of go over questions and whatever else. But yeah. So with that being said, God bless you guys. Thank you for the love and support. Don't forget to like the video, subscribe to the channel. If you know anyone that can, get some value from what it is that we do here, or would just enjoy spending time with us and get value while they're at it, definitely spread the word. And yeah, if you haven't subscribed, definitely subscribe too, okay? It definitely helps the channel reach more people just like y'all. And you guys know we're on a mission to try to help as many people as we can. So if you guys can help me with that, I greatly appreciate it. So yeah, with that being said, God bless you guys, and I will catch you beautiful people on the next one. Have a good rest of your day, you guys.